Welcome back to Sense or Sense. My name's Evan. We've got a lot to talk about today about the economy, interest rates, potential World War III with Israel firing missiles to Iran. We have problems in the housing market, and we have lots going on in the stock market. Let's get started. There's a lot to discuss. First of all, yesterday the housing market came out with a number for existing sales for the month of March 2024, negative 4.3%. That's terrible, guys. That's the first time since November of 2022 that we've had a significantly negative number. This was fueled by a lot of different things, including interest rates for 30-year mortgages topping 7% again. They had dipped down into the sixes for the last several months, and housing prices had stabilized a little bit because of that, and people had continued to buy. However, during the month of March, that was not the case, and it's gotten even worse in April. I would expect April numbers to be even worse, given the fact that the 30-year mortgages averaged during the month of April in the 7.25 to 7.5 range instead of the 7.1 during March. This is a really bad situation for everybody. As everybody knows, we have a shortage of homes in this country, and now we have interest rates staying much higher than we anticipated. And this is not a good thing for a lot of different reasons. People are finding out that even if they are able to buy a home, they're finding out that their insurance has gone up significantly in the last year to 2 years. My insurance on my home has increased by 70% in 3 years. It's pretty crazy to think that, but that's the case because of building costs, contractor costs, and overall cost of homes have increased so much. So that's a major concern of mine in this economy. The next thing that we need to talk about is the potential for a World War III or catastrophic attacks from Israel to Iran. Overnight, there were several missiles fired. We don't know the extent of the damages yet. Iran says that it's going to assess the situation and determine what it is that they're going to do going forward with that whole situation. I'm not sure what to make of it at this point, but one thing's for certain: oil prices are going up. We saw oil prices almost hit 90, Brent crude almost hit $90 a barrel, and I would imagine that gasoline prices are going to spike another 20 to 30 cents in the next couple of days. We will probably see close to $4 gasoline here in the Dallas area. We were at $3.50-ish over the last couple of days, up almost $1 since this time last year here. So that's a significant impact on the overall inflationary tone of this marketplace, and it's something that's to be concerned about. We will have to wait and see what goes on in the Middle East. It's not a good situation overall. But as of this morning, it looks like the stock market is not going to fall as much as I thought it would. Maybe it's going to be a little bit more resilient. Maybe the reaction wasn't as bad as most people thought it was going to be, but we definitely need to be watching it very closely. That leads me to my next topic, which is the interest rates. We've talked about at the beginning of the year, interest rates were pretty much going to be going straight down for most of the year. There were going to be cuts throughout the year, starting as early as March, April, May timeframe. Now it looks like there won't be a cut at all until late summer, early fall, and there's a possibility that there may not be a rate cut at all. There's a possibility of one or two. There were six possibly at the beginning of the year, and we've ratcheted all the way down to 1 to 2 at the end of this year. So it's going to be very interesting to see how that plays out. Obviously, that's putting a damper on the overall markets. The markets have been down like 7 of the last 8 days, and overall, I think we're about 5% off the highs, which we needed a pullback. But ultimately, it's with the whole thing going on in the Middle East and oil prices going up, inflation still being around. This is not looking good for the near term, and I would expect that the stock market would stay at best flat going forward for the next month or 2 months. And of course, it doesn't help that we're entering the worst time of the year for the stock market traditionally, between the months of May and August, going into even September, the stock market tends to underperform. And then you compound it with all the other things we've just talked about, and it's not going to be a good situation. So that's another thing I wanted to discuss this morning. And then lastly, something that you don't hear a whole lot about. The Japanese are concerned about the yen being worth a lot more, losing a lot of value relative to the dollar. So basically what this means is the dollar has been strengthening a tremendous amount. Everybody at the beginning of the year thought that the dollar would weaken, and they thought that with interest rates being going down, and the Bank of Japan came out and started raising interest rates at the same time, it put the hurt on in Japan. Right now, there's a 30-year high exchange rate for US dollar to Japanese yen. It's close to 155 yen per dollar. It has not been that high in over 30 years. And Japan's in a real pickle, so to speak. If their overall currency continues to be devalued relative to the US dollar, they're the #1 holder of US treasuries. And that's a big deal, because that means it's extremely expensive for them to buy anything that's dollar denominated, purchasing with dollars. So it's going to be very interesting to see what happens there over the next several months, whether or not they do something internally at the Bank of Japan to try to keep that number from going any higher. It's a great time to travel to Japan. That's one of the advantages for Americans. I went about 10 years ago, actually, almost exactly 10 years ago, and I thought I was getting a great exchange rate at 120, between 110 and 120 yen per dollar. It's now 155. That's incredible. That means it's wonderfully inexpensive for Japan's purposes, or for Americans' purpose, to go to Japan right now. I wish I could go, but at any rate, that is kind of the economic update for today that I wanted to provide you guys. Buckle up. It's going to be, one thing's for certain, volatility is going to be a big deal over the next several days, going over the weekend when the stock market isn't open. I'll provide another update sometime next week, and we can talk more about what's happening. I appreciate all you guys. Again, my name is Evan. This is Sense or Sense. I'd love for you guys to give me a thumbs up and subscribe to the channel, and let me know if there's anything you want to discuss. Have a good weekend, everybody. See you next week. Bye.